Gold is up 0.7% here. Yet again, another boom to the upside day for gold. And again, this is why we talk about it frequently on the show. We don't short rallies like this unless you want to get your butt kicked, right? That's the reality when it comes to this stuff. When the market is like ripping higher every day, those are markets to be very, very careful about. We're sitting at 2740 for gold. Nobody, very few people anywhere would have guessed at the start of this year that gold would go up by the magnitude that it has. Now, you can go watch my videos at the start of 2023. I put out a forecast video for 2024, and I've talked about this before on the show, but I had expectations for gold to, by the end of the year, be around 2280. And at the time, that felt really aggressive. Meanwhile, gold has doubled what I thought it would do, right? It's insane. Like the year for gold has been so remarkable. I was bullish because my theory was Fed's going to start to cut rates. Other central banks are going to start cutting rates. And that has been correct. But what has not been as correct is how far gold really went. But this is a good testament to when something trends very well, trying to call the top of a trend is very, very difficult to do. So was I right about gold this year? Yes and no. Yes in direction, but no in magnitude. I had no idea it would go this far. But fortunately, the strategies that I incorporate personally use trailing stops, which essentially means that when markets run forever, I love it. Some people hate it. Some people who are fading, trying to short markets that are rallying like this, absolutely hate years like this when markets just go up and up and up, or down and down and down. If you're on the wrong side of these moves, they can be very painful. If you're on the right side, they can be game changing. So it just kind of depends how your approach has been this year. For me, I've been very, very bullish on gold. I'm missing this rally. I wish I was in it right now. I am not. But I've cut a good chunk of it this year, so I can't complain. Taking a look at the dollar index. Dollar index is up at that level of resistance that we discussed here around 104, just shy of 104 at the time of us hanging out here, which, I actually don't think is necessarily the top for the year. This is the 61.8% retracement being retested on a long-term chart. If you were to pull up a weekly chart, this is a weekly chart Fibonacci retracement around the 61.8% retracement. That being said, look at gold on like the whole year, and it's been a really sideways year for gold. I'm sorry, for the dollar. I'm saying that wrong. It's a sideways year for the dollar, right? One ginormous channel this year. So when we look at the dollar index rallying up, I do think that the dollar index has room to continue higher. But what I'd look for would be clues of that through a breakout, right? If you get something like this, breaking that 61.8% retracement, it's very possible that, in my opinion, the dollar would likely go higher from there. Stock market just opened up. Let's take a look and see what's happening there. Here's the NASDAQ. We'll go to the 5-minute chart just to see the opening bell. S&P 500 trading lower here pre-market. U.S. stock market just opened up. Remember, it opens up every day at 9:30 a.m. U.S. Eastern, which was 1 minute ago exactly. NASDAQ, US 30, Dow Jones, aka. Russell's up a little bit here. We'll take that. I am long the Russell. I went long yesterday on the Russell.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Very curious to see how stocks hold up. I mean, the trend has been so strong to the upside here. I still lean towards the idea that the NASDAQ is likely to go back and retest these highs. I think that, you're getting a little bit of an everything rally right now. But the NASDAQ is still kind of faded behind. I think that it's likely to catch up. And in my view, I think technology leading rallies is a good thing. Now, you don't want technology to be the only one to be rallying, but technology is heavy in the NASDAQ, right? The NASDAQ is very tech heavy. You want to see the rally have tech participation. If you take a look at XLK, this is an ETF that tracks specifically the technology sector. You can see it is down about 0.76% here today, about similar to the NASDAQ. And we'll have to keep an eye, see how that trades here this morning. Silver's up another 2.2. Everybody fixates on gold, but man, silver is absolutely beast mode right now. In the last 3 days, silver is up another 9%, which is crazy. Crazy upside there. Oil's also having a little bit of a bounce. My thoughts on oil, somebody asked me what my crude oil ideas. Currently, I have nothing on the edge finder for oil, so I'm just going to stay neutral. Price action looks really back and forth here. Basically, I'd look for like breakouts either direction, there or breaks through the low. Looking for continuations, but only if confirmation is there from the edge finder. Currently, edge finder top setups currently showing Nikkei bullish, S&P, NASDAQ, the DAX, the Dow Jones, Bitcoin, UK 100, which is the FTSE, the Russell, and the Euro. These are top setups currently listed on the edge finder's top setups page. If you're unfamiliar with how this page works, it is looking at sentiment indicators, technical indicators, and economic data indicators and generating bullish and bearish readings for each category. So for example, inflation data came in still cooling off, right, for the US, and is giving us positive readings for most risk-on things. Remember, inflation cooling is generally pretty good for stocks, for risk-on assets like Bitcoin, for small cap companies like the Russell. So the edge finder is giving us some pretty clear signals on those things and has been giving us some signals for some time. I actually really like the indices on the long side. I am a dip buyer right now. If I can find dips, I will take them. So when I see a red day forming, I love to see that. So if I can get some dips, absolutely, we'll be looking to take advantage. Currently, what I trade changes. Sometimes people say, well, Nick, can you focus more on gold? Can you focus more on, the NASDAQ? Can you look more at FX? And it changes because what I trade, I'm not like dependent on one singular chart. I know some people say like, oh, I only trade gold. Well, I don't only trade gold, because if I only traded gold, I would have nothing to do for days unless the market pulled back, right? So I like to have a diverse list of things that I can trade, but I like to make sure that fundamentally we're getting some good confirmations. And so currently what I see is Bitcoin and indices giving me good readings, and the euro. But the problem with the euro for me is that even though I got a bearish reading on the euro, I'm not anywhere near a level of resistance that I can take a trade on. So you can see I've got my charts marked up on euro, but it's just a waiting game. And this is, again, the patience side of trading. Nick, how do you hedge? I'm not sure what you mean in terms of like, there's many different ways to potentially hedge. You can diversify. You can keep cash on the sidelines if you're on a stock brokerage account, which is something that I often do. You can trade different industries, different sectors, different markets. Like I'm trading gold over here and then trading indices and trading energy, and there's less correlation amongst everything that's in my portfolio. That's a way to hedge, right? You could potentially, like I don't do anything where I'm like long and then also adding shorts. Like I don't do that sort of hedging, if that's what you're asking. I don't long and short the same instrument at the same time. Another way that I hedge, I guess you could say, is through options. I love, and this is sort of a pseudo hedge. Let's say, for example, actually, I'm not going to spend a bunch of time on this because I just happen to know that my audience doesn't particularly love options. I still talk about them periodically, but I'm aware that my audience is not a huge fan of options. So let me do this. So I'll just show you briefly. When it comes to positions that I have, if I go over to options, this is a way that I hedge. Instead of just outright buying shares, I like to do the wheel strategy, which if you're unfamiliar with the wheel strategy, you can search it on the internet. It is a very systematic, simplistic way to approach the markets with options. For example, JP Morgan stock is a stock that I wouldn't mind owning in my portfolio long term. I don't own JP Morgan, but I've sold puts. So someone else out there wanted to buy puts, right? JP Morgan. They wanted to make a big bet that JP Morgan stock was going to crash. Well, I sold this like a month ago, but I sold puts on JP Morgan, right? JP Morgan. I sold puts here way down. Well, it looks crazy at this point because it's so far away. Over here, I sold puts at $200 per share. What that means is that I'm basically willing to buy the shares at $200 per share. And I got paid. Someone paid me for that option, right? That's how the options market works. Well, the market rallied, so that person's bet became worthless. And I just kept the premium that they paid me, which the premium is about $360. With that expiring in just a few days, that bet that someone bought from me, I'm going to collect $360. Now, how is that hedging? Well, the market at the time was trading here. I promised to buy the shares down here. So if I had gotten assigned, I would have gotten discounted shares, but I didn't get assigned. I just collected the premium, $360. And if JP Morgan dips again, then I will probably sell puts again. And that's the beautiful thing about, options. Options are a way, in my opinion, to take lower risk entries buying things long term. If you'd like to trade options, I have a video on my channel. You can search up Trader Nick Options Strategy on YouTube if you'd like to learn what I do there. It does require trading capital. It's not for small accounts. There are ways to trade options with small accounts, but I generally am an options seller. I'm not an options buyer. Some people will buy like big calls or big puts. I don't really, and you can make a lot of money doing that. If you're right, like if I bought a put at 215 for JP Morgan and the market crashed, yeah, that person who buys that put can make a lot of money. Don't get me wrong. But I go for slow and steady, consistent gains, which I think is very achievable using options selling. I'd highly recommend you look into it, do some research on it. You can lose money doing it just like everything else in trading, so it is no holy grail. You can get yourself into some nasty drawdowns selling puts and calls. So please be very careful and don't get into something without doing full research on it. So what happens if you sell an option and the price you picked it up at actually gets hit? Yeah, so if I sold JP Morgan, let's go back to my current example and I'll show you what would have happened. So I sold it over here. Let's say, I think I sold it like somewhere over here. Let's say that the market actually tanked and it went down to 195 at expiration date, which is November 1st. At that time, what would happen is I would still have to buy the shares at $200. So that's where the losses can happen, because now I had to buy shares at 200, even though the market is below there, right? I'm promising to buy 200 shares at any point during my contracts, before my contract's expiration. So there's risk, because what if the market tanks massively and I have to buy the shares, even though they're trading at 188, I got to buy them at 200. Most of the time, though, that doesn't happen. Most of the time, the market goes sideways or slightly up, and every once in a while, it tanks. And when it tanks, I just deal with it. I buy the shares and I hold on to them, and then I can do what is called selling covered calls, which is another thing you can do. The wheel strategy is, in my opinion, one of the easiest ways to generate slow and steady income in the markets. And when I say slow and steady, I am talking slow and steady, like not making big gains, but making very consistent gains. And when I say that, I'm talking about like you would be doing really well if you made like 2% per month selling options. conservatively. If you're more aggressive, you can make more, but I'm just not interested in aggressive strategies. I'm interested in slow growth. Because slow growth is consistent growth. And that's all I care about. I don't care about making huge gains quickly. I care about making consistent money overall.
Hope you're all having a great start to the week. No, I am. Just closed 2% on pound dollar. Just sort of an intraday trade here. Very simple stuff. So a correction of the US news we had last week. Very simple pullback. Generally speaking, wanted to go short on pound dollar anyway. The main reason is obviously we've got the very strong US dollar that we're seeing at the moment here. So someone asked me yesterday, how do you really go about trading in the sense of how do you actually get the direction? And obviously, when you really think about it, it's a good question. It might sound a little bit silly to some people, which is one reason I have started actually plotting out news releases rather than just keeping notes. I actually plot them on the charts now, and it starts to sort of fit together, almost like a jigsaw. So you can see when we have the downturn, you can see as it comes in, why it's happening and when it happens. And then we see the increase in US labor market, or the more strong numbers coming for the labor market, and the repricing of the Fed cut, lower inflation, lower jobless claims, and overall better data for the dollar. And the UK still on its downturn here. As we can see, I've not actually plotted anything here, but weak UK data really. And they've also announced that they're going to start cutting rates. So it was sort of a very simple trade, really, no brainer. And on that similar point, I'm also in a short here on euro dollar to the short side. So this one's even more clear really than pound dollar. I've been speaking, in fact, a lot of people, even Nick, I think has been speaking about euro dollar to the short side, but it's very difficult to get in. So, I was planning shorts essentially since sort of here, so the start of October. So for almost a month, I've been wanting to go short, and there's been absolutely no opportunities. So the fix for that, rather than trying to force something on a swing trade, we just go down onto smaller time frames. I'd use my statistical approach rather than trying to catch some larger moves. Target on pound dollar. I don't have one now. I'm out, closed out for 2%. I did have a take profit. It was I think it was 1.25. No, it wasn't. I can't remember where exactly it was off the top of my head. Oh, it was here. There you go. 1.27 was the long-term target I had. So I might get back into this one later in the week, but for now, just for starting the week, not bad to close out. We can go over the DAX in a moment. Do you talk about collecting dividends in US 30? I'm collecting dividends. I don't know where they're coming from. Yeah, so you can get dividends. It depends obviously what you're trading. But you should be getting paid essentially for holding. It's best to check with your broker really, because it can vary. The only position I'm really in at the moment is euro dollar. Looking to get into some other positions as well. So let's see here. The DAX, actually, let's move on to the DAX. I was looking to get into that one as well. So I was going to enter on the rejection down here on small time frames. Again, just relating back to what I've been saying recently, that the markets are very extended. So if you look at US 30, the S&P, NASDAQ, even Bitcoin, I guess you could say, they're all in very difficult places to really get in. So I've been scaling down timeframes. I've been very focused on day trading recently, or intraday trading, rather than trying to look for longer term things, because there's just no way to get in. DAX still looking to buy. So if we look at the Edge Finder here, DAX is still getting it's still getting a bullish reading of 7, which is good confluence here to continue the buying. The problem is, where do you get in? So if we look, retail is flat, it's 50-50, so it doesn't really tell us much. We've got the only negative really is retail sales actually. COT data not there. Seasonality is bullish as well. So the data on Edge Finder is very supportive of this position to the long side, but again, it's just trying to actually get in. So if we look on the daily time frame, there's not really much you could do here. I guess you could draw a fib, but even this you would need, you'd need to have just under an 800 point move. So yeah, I'm not really going to rely on a move like that when I can sort of just scale down timeframes and day trade my way into it. US 30, don't really have much interest in US 30 at the moment. That one is also, yeah, so if we look on the Edge Finder here, we've got the S&P, Nikkei, NASDAQ, UK 100, DAX and Dow, and the Russell. So it's very clear that the indices markets are in a bullish season at the moment. What are the timeframes you've used for intraday? So I use 3. I use the daily for the trend. So I've got the 21 moving average here, and I've got the, well, it's the 8. It's not working for some reason here. There we go. We've got the 8. So these two need to align. So I'll only buy, this market's clearly in a bullish run. So I'll only start buying. I'm not going to sell this, and vice versa. So daily for trend, I use the H1 and the 15 minutes for entries. It depends on the exact market and the exact trade. But generally I'll use the 15 minutes, but sometimes I'll go to the H1 if I need to. So yeah, looking to get into US 30 here on this fib pullback. It does look like we might get there. I suppose the only headwind, I guess you could say, is this sort of support level we've got through here. So if we can break below that, it would be nice to see this level here get hit in between this fib, use this previous resistance as a support. So a very classic break and retest and a continuation to the upside. So that would be good to see. It seems like we are having some pullbacks on the indices at the moment. We've got DAX that had a little bit of a pullback. NASDAQ is just ranging. Actually, NASDAQ's quite ugly. US 30 is pulling back, and the S&P also does look really good. So if we look actually on the S&P here, on the hourly time frame, we've got this really nice trend line. Let me just change this actually. There we go. We've got a really nice trend line. Currently, price is testing this along with the level of support. Now, if we draw a fib as well, we've got quite a lot of technical factors here, along with the 200 moving average. We've got support, we've got fib, we've got trend line, we've got the edge finder saying that the S&P is bullish. So we've got lots of things here to say that we could go long. It's just, am I happy to buy where the market is right now? It depends. Because as I said, it really depends how the daily continues to form. I'm not super confident right now. Did you gold already? Oil, pound Swiss. So yeah, oil. I'll go in order. So yeah, oil's first. Yeah, I'm not interested in oil at all, to be honest. The reason is because there's still problems. So there is, actually, let me pull it up. So in the research here, we've got WTI crude prices fluctuate between 75 and 80. This was from last week. Per barrel, driven by improving supply conditions from key producers like Iran and Russia. Like Iran and Russia. Easing concerns about shortages, however, demand remains relatively steady, especially with China increasing its oil consumption, OPEC plus production decisions, geopolitical risks in the Middle East, and fluctuating demand from China all influence crude prices. So to me, there is no clear direction for oil at the moment. It's not on the edge finder. There's nothing overwhelming in terms of global macro. So oil technically here actually does look quite nice to go short. So we do have this level sort of resistance here, 200 moving average. We've got the RSI looking like it's about to be oversold. So yeah, technically it does look good to go short, but again, there's just nothing really substantial to back up that idea for me. Pound Swiss. Yeah, it seems like the Swiss has gained some attraction recently. Past 2 days have been bearish. The weekly doesn't show anything. The hourly's bearish. H4 looks almost bearish. Yeah, so the technicals here are very underwhelming. I suppose we do have this trend line here. So depending on the way you trade, you could be looking for a break and a retest here. But yeah, it's not a market that I'm really interested in. It's similar to sort of dollar CAD in terms of it's just a range. It's a very range bound market. It doesn't tend to do that much unless there's a serious thing going on. And at the moment, for me, there's not enough really to drive this market either way. It's more just ranging. Have you seen the monthly candle on pound dollar? I haven't actually. Let's see. Yeah, that's quite a nice candle, isn't it? It's a nice bearish engulfing candle. But yeah, we'll see. We'll see how it develops. I'm not really interested in the monthly time frame too much. The weekly, the daily, and sort of the H4, my playground for swing trading anyway. Hope you're well. Analysis on Euro Australian, currently in a sell. I closed my sell this morning actually for break even. More just to get rid of some exposure. I wanted to open some other positions, so I had to get out of one just to minimize risk really, but I can't remember exactly where the entry was. I think it was somewhere around here. We had a stop loss around there. So this was similar to what I was in. And we saw 2 bullish days here, and today on this candle just closed out at break even. I wasn't willing to sit in it. It was also on the edge finder as bearish reading previously, and it's not there anymore. So I was like, you know what, I'm not going to sit through unnecessary drawdown. Although I do still think this market's got some way to go to the downside. So again, we do have a very weak euro. So if we look here, the euro index is just collapsing. You know, well, I use the word collapsing loosely, but you know what I mean. So we've seen, yeah, coming up on a 3.5% drop on the euro with very little movements to the upside. So again, that is relating to the weaker eurozone data and the European Central Bank cuts. The Australian bank is holding, so yeah, nice central bank divergence there. Along with the commodities rising, that also benefits the Australian dollar. So if I had to pick a side, I would still go short. But yeah, at the moment, it's not a trade I want to be in. Gold. Every time I come here, people talk about gold, and I say the same. Well, I've been saying the same thing for the past, I don't know, like 2 or 3 weeks. There is nothing you can do on gold. Or nothing I can do, I should say. You know, it's like, what can you do here? You know, you could try and draw a fib, maybe look for this fib pullback here, but even that, you need to see, let's see, you need to see a 2.3% drop and a 629 point move to the downside. Is that going to happen? Probably not right now. What we could see to drive that down is the US data. So we've got unemployment claims, manufacturing PMI, and services PMI coming up on Thursday. So that might be a catalyst that you could capitalize on to get into gold. But right now, what can you do? In my book, there is nothing. Even for, you know, smaller time frame trades like the hourly time frame, there is no way to get into this. It's a rocket to the upside. I suppose you have one entry opportunity here on this very small pullback, and one down here, and I suppose a support here, but that's about it. There's really nothing here you can do at all. So anyway, let's see what's on the watch list this week. Bitcoin. Actually, I'm watching Bitcoin because Nick mentioned it. I don't trade Bitcoin really. However, when I see an opportunity, I'll look. Even if it's not an asset I'll trade, I might just completely scrap it. But I like to just watch and see what happens. So I am watching Bitcoin. We've got a really nice 50% level here that lines up with previous structure. And we've also got this descending trend line here. So we've got 2 things here that could happen. That I see could happen really is a retest of this trend line and then a continuation to the upside as we have broken out of this trend, or a pull back in, retesting this 50% level and a continuation to the upside.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.